Hello students, welcome to this video lesson, and in this lesson we'll be seeing the meaning of rebate on bills discounted and the calculation of rebate on bills discounted. So this is part of accounts of banking companies, and we all know that how the accounts of banking companies are prepared, and you will have adjustments related with this. Okay, so rebate on bills discounted, what is it? We all know about the meaning of bills discounted. That is, bills discounted means the bill of exchange with the customers of the bank which is discounted earlier, or which is surrendered to a bank, and the bank becomes the owner of the bill, and the bank can collect the amount on the due date. So what happens is the bill, so discount becomes the property of the banker, and for that, suppose rupees 1000 bill of exchange is discounted with the banker. What happens is, sometimes if the banker is charging an interest, and if the interest for say the term of the bill comes to rupees 100, the banker will pay only 900 to the customer, and the 100 that will be the discount for him. Okay, so that will be the interest income for him. So with that information, most of you will be knowing about this concept of bills discounted. So I'm moving with the rebate on bills discounted. That is, the bills discounted by the banker may have different maturity dates. So as long as the maturity dates are falling within the accounting year, there is no problem. But the problem arises when a part of that period, that is when a part of the period of the bill is falling in the next accounting year. Okay, so the interest pertaining to the period falling in the next accounting period is known as rebate on bills discounted. So that particular interest which relates to the period falling in the next accounting period, that is often referred to as rebate on bills discounted. So this is just like unexpired discount on the bills discounted, and it is a discount received in advance. And now in this illustration you can see a bill was drawn and discounted on 1st February 2019. The accounting period closes on 31st March 2019. Okay, so the bill was drawn and discounted on 1st February 2019, and the accounting period normally it closes on 31st March 2019. No, but the date of maturity of the bill is 31st March 2019. So in this case, what you have to do is, that is, you will have to calculate the maturity. So in this case, what happens is, the bill is discounted on 1st February 2019 and the accounting year is ending on 31st March 2019. So there is no problem, because the date of maturity, or the date of maturity is 31st March 2019 itself. So no problem. The entire period of the bill is within that accounting year itself. So no problem. And you are calculating 2 months bill. That is, in the case of 2 months bill, you will be calculating interest for February and March, and February and March interest will be considered as the interest income for the current year itself. Okay. And now the problem arises when it happens otherwise. Like, say, it happens like, suppose if this is the 31st March is the end of the accounting period, and you will have to calculate interest or rebate on bills discounted, or the discount on bills discounted, the discount factor, the discount amount you will have to calculate. So now the problem is, if it is 3 months bill and 2 months are falling in the current accounting year, and the date of maturity is in the next accounting year, say at the end of April. So that is the case. So 3 months bill, February, March and April are the tenure of the bill, and you have to calculate the interest. So you will be calculating interest for this entire period, that is for February, March and April. You will calculate the interest, and that will be the interest recorded in the books of the banker. In the ledger, that will be the interest recorded. That will be the discount amount recorded in the books. See, I am interchangeably using discount and interest. Okay, discount means it specially pertains to the interest income that the banker gets by discounting the bill. it is the interest income itself. So that is why sometimes I am using it interchangeably. Okay. So interest for the entire period will be calculated, and if it is coming to rupees 300, say 200 rupees will pertain to the current accounting year and 100 rupees is for the next accounting year. So 100 is for the month of April and 200 for February and March. In that case, the banker will record 300 as discount or interest, and the rupees 100, that is the interest of the month April, should be deducted from this 300, so that you will get 200, which is exactly the interest amounts for February and March, and that only will be recorded in the books of account. So what you will do is, the interest income, from the interest income or from the discount, you will deduct rebate on bills discounted to arrive at the exact figure of interest or discount that you earned during the accounting period. Okay, and next year's interest, no, that will be considered as rebate. So it is part of the total interest, but you are splitting it as interest for the year and the rebate. Okay, so that is how it happens. Now let us take another case that is same as that of the previous illustration. That is, a bill was discounted on 1st February 2019. The accounting period closes on 31st March 2019, and the date of maturity of the bill is 30th April 2019. So what happens? The same case, February and March in the current accounting period and April in the next accounting period. So 3 months bill means February, March and April. Now February's and March doesn't have any problem, like it is falling in the current accounting period and it will be considered as interest income for the current year, and the interest income pertaining to April will be taken as what? Rebate on bills discounted, and it will be deducted from the current year's interest. So that is how you do with the rebate on bills discounted, and it will be shown under other liabilities in the balance sheet also. It will have twin effects. One is that it will be deducted from interest income, and the other is that it will be shown as other liabilities in the balance sheet. Now let us see a question. That is, on 31st March 2018, a bank had the following bills discounted by it earlier. So 3 bills are given. Okay, date of the bill, and let us take the first case. Date of the bill is 1/1/2018. Term of the bill is 4 months. Yeah, discount rate is 18%, and amount of the bill is 9 lakhs. So how will you calculate? If you want to calculate the total interest for the bill or total discount for the bill, you will calculate it as 9 lakhs into 18 by 100, which is the rate, into 4 by 12. You can easily calculate, but that is the total interest, no? But here you are required to calculate the rebate on bills discounted. Okay, so let us see how to calculate the rebate on bills discounted. You don't have to worry about the total discount, but only the interest component pertaining to the next accounting period is taken here. So that is why they have asked to calculate the rebate on bills discounted. So on 1/1/2018, the date of the bill, term of the bill is 4 months. So how will you calculate the due date? Due date is, how will you calculate? You hope you may be remembering, you might have learned in lower classes, that is the date, that is the months you will have to consider, and 3 days of grace you should give, no? You have to provide for 3 days of grace also. So a bill drawn on 1/1/2018, that means January, February, March, April. Okay, that is January, February, March, April. So April, and on May 1st, the bill will mature. But even though the bill matures on 1/5/2018, you will have to provide 3 days of grace. That means 1st May, 2nd May and 3rd May are the days of grace. And the next working day or the next day is 4th of May. That is why the due date is 4th of May 2018. And for that you have calculated the due date, and you will have to calculate the number of days beyond 31/3/2018. That is, after 31/3/2018, how many days are there? That is, in April, the full month of April you should take into consideration. So April has got 30 days and 4 days of May. See, 30 plus 4, 34, and amount is 9 lakhs. And you are just calculating the rebate, that is 9 lakhs into 18 by 100, but only 34 days interest will be considered as rebate on bills discounted. So 34 upon the total number of days in a year. So this will be the closing rebate. So I told you in the beginning, when you have to calculate the total discount, that will be different. 9 lakhs into 18 by 100 into 4 by 12 will easily give you the amount of interest, whereas for calculating the rebate on bills discounted, you will have to do like this. Okay, you'll have to calculate the exact number of days falling beyond the closing of the year, and then you will have to calculate. Similarly, for the second bill, 7/2/2018. So you'll write the date of the bill here, 3 months bill. So February. So February means March, April, May, 3 months. So on 7th of May, it is maturing, but the due date will be after 3 days only. So 7, 8, 9, 9th of May. These will be allowed as days of grace, and on 10th you will be taking it as the due date. And now you will calculate the number of days beyond 31/3/2018. So here it is, since it is on 10th of May, you will take complete number of days in April, which is 30, and in May it is on 10th, no? So 30 plus 10 will give you 40, and you will find out the corresponding 40 upon 365. Interest rate is different. And here by now you will be knowing how to calculate the due date. March 9th. March 9th means March, so April, May, June, 3 months. June 9th, but 9, 10 and 11 will be days of grace, and on 12th you will find out the due date. And how will you find out the number of days beyond 31/3/2018? That is April 30 days, May 31 days, and June 12 days. So add it together. That is how you will take, that is how you will get 73, and 73 by 365. And you can find out the total closing rebate. That is, for these 3 bills, there are different amounts, and you can calculate the total of the rebate, and you will get the total rebate. Thanks for your patient listening. Have a nice day. Hope you understood the concept of rebate on bills discounted. And this is just one model of calculation of rebate on bills discounted. And in some problems, you will have to, in final accounts, if it is asked, you will have to deduct the closing balance of rebate on bills discounted from the total interest income. And if there is any opening balance, that can be added. Why? Because this closing balance, next year it will come as opening balance. Next year it will be the opening balance of the rebate on bills discounted. But that pertains to the next accounting year, no? So that is okay. So this 30/180 you will add it at that time. So that is why opening balance is added and closing balance is deducted from the, that is opening and closing balance of rebate on bills discounted is added and deducted from the interest income. Okay. Thanks. Thank you so much. Thank you for your patient listening. Thank you. Bye.